So what I'll do is give you an introduction on the German investment market, some very brief comments on the underlying occupier markets, and then touch the topics 2022 that we as BNP Paribas think will drive the market. Well, first slide, please. Click on. Next one, yeah, that's Berlin. We're going to talk about Berlin a little later. That's actually my most favorite slide. It puts Germany into perspective, the European perspective, and it gives you a good idea of the interest and market dynamics that we see. Germany came in second place in 2021 in terms of investment volume. But you can see here, we saw a dip in 2020 for sure, but we've always kept performing above average. We are plus 7% up year on year to 64 billion. UK came back into pole position, but still performing below average, but saw a considerable hike by 21% year on year. But you can also see, if you move your eyes a little towards the middle, that Berlin is outperforming, and many of the German countries are outperforming entire countries. Unfortunately, I cannot see that now, but I know it's been Poland and Ireland, and Cologne was even stronger than Milan. So that's quite a big story. What you can also see is that the German capital still has a gap to close. Oh, that's beautiful. I can see that now. In terms of being a runner up to central London and central Paris, they are still playing in a different league. So next slide, please. Where's the money going? The German A cities attracted 68% of capital invested in the past year. Berlin is clearly in the lead with a very strong volume of more than 11 billion euros. The German capital sets itself apart recently from Munich and Berlin, clearly above average. It was the second best result ever recorded in Berlin. Same holds true for Munich. Munich with a very strong year, seeing a couple of very big office deals, almost unusual. Then Frankfurt, below average, but still a good result with almost 7 billion. The top performer of the year is Cologne with a stunning result. Everybody likes and loves Cologne lately. And if you think, interest in the second largest German city, Hamburg, is very limited, nope. Lack of product is what was driving the market last year. In my hometown, which you can see in my back. Single deals have been dominating the market with a market share of 75%. Again, it's a question, where's the product, what's available? And there was just not so many portfolios in the market last year. And we've also seen a stunning number of major deals, most of all in the office segment. Among them, the largest single deal ever closed in the office market, that was the purchase of the development T14 by Allianz in Frankfurt. So that was a forward deal, 1.4 billion euros. That asset was. Next slide, please. What's in focus? Yeah, well, there's lots of talk about working from home. Where will we work in the future? Does the office have a future? The office segment is clearly dominating the market with almost 48% market share last year, with a very strong result of almost a good 30 billion euros. Retail was sluggish even before COVID. There is a strong divide between high street retail, where there is very moderate market activity, demand is hesitant, versus strong interest in retail warehousing and any retail assets that are grocery anchored and cater for the daily needs. Logistics for sure is the big winner of the COVID pandemic. That's across Europe, I believe, strongest result ever. And more and more investors are turning to sort of alternate assets like healthcare. That's also something that's on the radar now. And hotel is probably also making a good comeback in the next year. So next slide, please. Who's investing? I'm not boring you to tears. It's the special funds and the investment and asset managers. But what I find striking is the 12% generated by project developers. That shows clearly the strong interest and belief in the German market and the ability and the commitment to deliver further product and believe in the strength of the occupier markets. Who's investing? Same picture as last year. German players clearly dominating the market with 61%. Foreign investors keep the level at 39%. It's not so bad as it sounds, as they had seen their highest share in 2015 with 50%. Given the restrictions in traveling, that's a pretty good result. But we'll talk about it a little later, I think. Next slide, please. COVID-19, the end of yield compression, certainly not. We have seen prime net initial yields coming down for most assets, exception for sure shopping centers. There is some hesitance in the market for a reason. We've seen strong yield compression in the logistics sector, record low with 3% now. Retail warehousing, very tight, and the office market, prime net initial yield below 3%. So that's quite a story. Next slide, please. Yeah, that was all about commercial. We clearly make a distinction between commercial and residential. The German residential market is like one of the hot topics, I think, in European real estate right now. You see, we've seen a record volume of more than 50 billion. Just make sure you keep in mind that one deal alone generated 22 billion. That was the taking over from Vonovia by Deutsche Wohnen. That result is likely to stay for history because such acquisitions are not on the agenda every year. Next slide, please. And there's strong interest now in buildings that are certified, sustainable buildings. We've just released our investment sustainability report yesterday. The market share is now 25% in single deals, and the trend is clearly showing upwards. Next slide. All right, the underlying occupier markets, I think we'll talk about, next slide, please, about that a little later. What we see is there's a return of take-up in the office markets. Logistics for sure is up. It's just a question of where's the supply in logistics. In retail, we see more leasing activity than in the previous year, more shop openings. There's chances that retailers are actually taking. Hotel has been up. The German residential market is a story of its own, and there's, as I said, more focus on healthcare now because we're such an aging population. I think we're the second oldest population in Japan. There's something that we need to do about that. Next slide. So I hope I get this right, the hot topics, but we'll discuss this with the panel. Next slide, please. Is for sure the future of work. Where do we work? What will be the impact of working from home, mobility work on the office markets? Then for sure the German residential market is very stable, very strong growth, rental-wise, very low vacancy rates. Alternative assets will be in focus for many, many investors. Then ESG, how do we get the S into the ESG? That's the next challenge. What's going to come up with inflation? Big question mark here, and the economic recovery for sure. Will it come? How will it accelerate? And if we're unlucky, next slide, we'll have further discussions on the Ukraine.